Hey, this will be a robotic trading quick lesson entitled Volume Strikes Back. The reason for the title is I have already done one quick lesson on volume before, but this past week a couple more examples happened that make perfect examples of how when you incorporate volume as an indicator into a chart trading strategy, it really can lead to some solid, profitable trading opportunities. First thing first, though, just want to issue a warning. While volume is definitely the driving force behind the strategy, there are other things on a chart and within the strategy that you do need to understand. So if you don't completely understand charts and have never really used them before, don't go out there looking for just a volume or a chart with volume and then start putting your kids' college tuition money on it. So you really do have to understand charts because, again, volume is definitely a big part of it, but there are other aspects that you need to understand about charts in order to properly implement these sorts of strategies. So the first thing I want to do is just establish some sort of time period. I said, what happened this past week, and being this is the internet, lots of games out there being played. So here's the New York Times. You can see up here Saturday, December 29th, right around 1:15 p.m. Eastern. So let's refresh the page. You can see right here, still Saturday, December 29th. So the date as of this video is December 29th. Looking here now at the Twitter page, this is what we do or use to keep members and so forth up to date. At Bull Warrior, you can see that here we have all sorts of tweets, and the tweet that I want to point out is right here about TAMO. You can see on December 27th we alerted it, and it was pre-market because I'm talking about a trade morning. So just real quick so we can see that this is an actual Twitter page, let's refresh this page. And you can see again, this is an actual Twitter page, and if you want to verify that yourself, again, just go to bull_warrior and you can verify that. But you can see we alerted TAMO on December 27th. Looking here at the 30-minute chart of TAMO, you can see that the day before had that last half an hour big volume, so that's what prompted us to alert it. So then the next morning, what happened, had a gap up. So the first half an hour of the following day after we had alerted it made a big move up, followed by another half an hour of good action, and then in that third half an hour of the day, you can see it went up and put in a new high, consolidated a little bit, and then headed back up and retested these highs again the following day before finally pulling back. So again, this is a 30-minute chart, meaning each one of these bars represents 30 minutes of price action. So just based on, you can see there that volume surge compared to all these other days, definitely a bigger day in volume in that last half an hour, and then the following happened the next 2 days. So again, volume doing a great job of being a leading indicator. Now, just to be fully disclosed here, we did not alert this one. This is just another example that happened this past week, but we can't take credit for actually alerting it or anything like that. But it does make a great example, so that's why it's in the video. But one more time, I don't want to come across as trying to take credit for alerting it, but it does make a great example. So on WIMH, and you can see here, the date on this was a 12/5. So it happened a little while ago, but this is a perfect example of how volume can work for day traders, can work for scalpers, or can even work for the swing traders for longer term holds. So you had this big volume again, much bigger than anything it's seen. And then let's just quickly go through it because this is a longer term trade. There's a high, consolidates, boom, there's another high, a little bit more consolidation, and then another high yet again, and another high, and that's where it ended this past Friday, 12/28 at 88 cents. So remember, today is 12/29 as we verified. So as of yesterday, it closed up here at 88 cents, and who knows how high this one's off to go. But you can see there from that initial volume, I mean, what a great move for swing traders that have incorporated volume into their strategies. So now let's take a look at the results. This right here is TAMO. This is the one we did alert on Twitter and Facebook and our social media. And you can see that the day after, or I should say the day of, because we alerted it in the morning before the morning bell, opened at 15 cents and then twice actually went up and hit 22 cents, both the day of the alert and then the following day tried to break through it again. So from 15 to 22 cents, nice gain of 46.7%, or I should say a profit window of 46.7%. And the key with this is plenty of liquidity. So there's all sorts of ability to get in and out. You could have easily put in, let's just say $5,000 and had no problem selling that because there was a massive amount of liquidity, which is always key. And then for WMIH, the 60%, or it had a 60% move, opened here at 55 cents the day after the big volume, and then as we illustrated, went all the way up, and it's closed at 88 cents, but it's not done yet. The 88 cents was close of yesterday, 12/28. So who knows how high it's going to go, but so far it's already made a move of 60%. So for the swing traders and so forth that notices volume bar down here, it's been a profitable swing trade, and who knows, it could be on its way to over $1. But at the time of this video, it's closed up here at 88 cents, creating a profit window of 60%. So just a quick look at the numbers here. Want to show that how these things can really add up, but we're going to be very modest, very conservative in our numbers. We're not going to throw anything out there that where you'd have to play it perfectly. So we're going to just say that, let's say you put $750 into the trade and only captured half of the move. So I think that's very modest, only capturing half the move. So if you only captured half of that profit window for TAMO, half of 46.5% is 23%. When you multiply that by 750, you would have walked away with a $175 profit. WMIH, half of 60% is 30%, and 30% of $750 would be a $225 profit. So on both of those, assuming you only captured half of that profit window, which is very modest, you could have still walked away with some very nice profit. And then I wanted to end on this just based on all the questions and stuff we always get, people asking, hey, what do you think of this? Am I doing this right? And really, don't cut yourself short. Spend some money on some education. For our robotic trading, it's $149.95. Yes, I'm biased. I'll be the first to admit that. But if you read the testimonials, there's well over 20 of them. You can see that things, do work out and are able to really pay for themselves relatively quickly. And if we look at just this two examples, with TAMO, we said there was a profit of 175. So if the cost of that was 150, you could have had in one trade the cost of education paid for, and you'd still have 25 extra dollars in your pocket. With WMIH, with the $225 profit minus the cost of education, you'd still have $75 left over. So, and keep in mind, this is using conservative numbers. If you would have captured, let's say, 75% of the move, these numbers would be that much higher. So by using conservative numbers, you can see that you can pay for an education in a single trade and then still have money left over. I'm not saying you have to get robotic trading. I'd encourage it, obviously, but there are other educational products out there. But using mine at 150, you can see just how fast it can be paid for and then still have money left over by just using conservative numbers. So, and like I said, if you don't understand charts, I wouldn't go and just start throwing money at anything. But by using charts and understanding them, which this course will help you do, hopefully these numbers make sense, and you can see how fast you can get things paid back for, and then everything after that is just kind of extra gravy, and it's all profit in your pocket. Thanks for watching the video. Hopefully you found it helpful and pulled out some things that you can use in your trading strategy, whatever that may be. If you did find it helpful and informative, then I'd encourage you to check out a couple of these resources here. The first being our robotic trading course. As you can see, it's over 8.5 hours of teaching, so there's plenty of information. There's all sorts of stuff, and with it you'll be able to build your own strategies, learn about charting in general, and just really be able to, like it says, profit in any market environment. Because remember, just because the market may be bad, you can always short and things of that nature. So with the course, it goes over how to use charts, and when you learn the foundational things like that, then you can begin to build your own strategies that benefit you and fit into your personality and so forth. So I'd encourage you to check that out. And also on that note, I'll be the first to admit I'm pretty biased when it comes to it. So I'd encourage you to check out the third-party reviews and testimonials. Those were all unsolicited, all uncompensated. So these were just people that were reaching out to us saying, hey, I bought the course and these are my thoughts. So I'd encourage you to go to that link and just check out third-party reviews, because like I said, uncompensated, they reached out to us and wanted to offer feedback because they were happy with the course. Also, we have a Bull Warrior Stocks newsletter that is located at bullwarriorstocks.com. If you sign up for the free newsletter, you'll receive a free ebook with some charting strategies and so forth, a part of it. And like I said, that chart or the site is completely free, no obligations, no hidden cost, no strings attached, anything like that. You can subscribe, unsubscribe whenever you want to, and you're not going to have any sort of cost or anything pop up. So I'd encourage you to check out that. But as a warning, I'd say that it's better to learn charting and so forth, because the Bull Warrior Stock site is revolving around charts, so you got to know what you're doing when you're looking at charts. So place one to start would be up with the course, and then that way you can gain an understanding and add another tool to your tool belt. So again, thank you for listening. Hope you enjoyed the video. If you have any questions or anything on either of these things, please get a hold of me. Thank you and have a good one.